Hello Kanna, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. In this video we are going to discuss about the exemption chapter. Now when it comes to the May 24 and November 24, that is the new syllabus that is released by ICAI, what ICAI has done is that there were various exemptions in the exemption chapter. So a few exemptions have been removed and balance exemptions have been shifted to the different chapters. They have been discussed along with the chapters itself. Hence, you will not find any separate exemption chapter in your study material. But what I have done is the earlier exemption chapter itself, whatever exemptions have been removed, that I have taken out of my material. Whatever exemptions are there alone, I have kept in the material. They are in your study material, they will be discussed in different chapters, but in my classes I am discussing it here itself together in one place. Okay. Now if you have taken classes from me earlier, that is on or before 15th of January or 20th of January, then in your book you will not find those exemptions. Hence, as and when I am taking this chapter, I request you to find any blank space in your income tax abridged book, and in that blank space you can note down all the points that I am telling you. You can see the screen and you can note down. But if you have taken classes later on for May 24 for November 24 examinations etc., then your book will be containing these exemptions. Fine. So first and foremost, in the exemption related to agricultural income. Agricultural income is already covered in PGBP chapter. Correct? We have already discussed it. Then exemption related to special economic zone, or we can call it deduction related to special economic zone. This also we have discussed in PGBP chapter. Then other various exemptions are also there, which we have discussed in that chapter itself. For example, 10.7, 10.5, 10.10, etc. We have discussed in residential status chapter, salary chapter, and various other chapters. We have already discussed these exemptions. So these exemptions I will not be discussing once again. I will only be discussing the exemptions which we have not discussed before. Okay. That is only one page of content, Kana. There are only 11 exemptions that we are discussing in this video. It is going to be a short video, and exemptions are not that difficult also. Very simple concept. So first and foremost, section 10 clause 2, members of HUF. Share income received from HUF is exempt. Very simple, Kana. For example, there is a family. Okay, the family is having a HUF. Now the HUF has earned an income of rupees 20 lakhs. After earning the income on 20 lakhs, it has paid the income tax. Now this 20 lakhs is distributed among the family members. Let's say the family members are A, B, C and D. So the family members have received the income from the HUF, their own share. This is called share income. Share income. Let's say Mr. A is the Karta of the HUF and Mr. A has received share income of rupees 5 lakhs. Now, should Mr. A pay tax on 5 lakhs? Answer is not required, since the HUF has already paid the tax and the taxed amount only is received as share income from the members of the HUF. That is why no need to pay the tax once again. This 5 lakhs will be exempt under section 10 clause 2. You get my point? Next, section 10 clause 2a. Partner of a partnership firm or limited liability partnership, share income of a partner is exempt. Now listen here. Same concept only, Kana. Let's say there is a partnership firm called XYZ and Co, who are having 3 partners, X, Y and Z. The partnership firm earned an income of 20 lakh rupees. Now for simplicity's sake, let us keep that they have paid the income tax of 5 lakh rupees and balance profit is 15 lakhs. Okay, this 15 lakhs has been distributed among the 3 partners, X, Y and Z. This is only called share income. Now same concept like how we discussed for HUF, since the partnership firm has already paid the tax, So the partner need not pay the tax once again. It will be exempt in the hands of partner. Okay. So if the firm pays the tax, the partner need not pay the tax. However, if the firm will not pay the tax, then the partner has to pay the tax. This discussion we are going to do, or if you have seen the PGPP chapter, we have already done this discussion when we discussed the section 40B, that is remuneration or interest from partnership firm. So if remuneration and interest is allowed as deduction in the hands of partnership firm, the same remuneration and interest will be taxable in the hands of partner. However, if any amount is taxed under the partnership firm and then if it is given to the partner, then it will not be taxed in the hands of partner. It will be completely exempt. Now, there was one case, Kanna. What was the case? There is a firm called XYZ and Co. Okay. It was doing agriculture. Now, after doing agriculture, they earned an income of 50 lakh rupees. Okay, and this 50 lakh rupees they have distributed to the partners X, Y and Z. This 50 lakh rupees is exempt in income tax under section 10 clause 1. Agriculture income is totally exempt. That is why the firm did not pay any tax. Since the firm did not pay any tax, the assessing officer of this partnership firm asked the partners to pay the tax. Now, should partners pay the tax or not? Answer is this case went to the court and the court decided that the partners need not pay the tax because the firm, that is XYZ and Co. Okay, is nothing but the group of partners. It is not a separate body or it is not a separate person, it is just the group of the partners. Hence, if the firm is earning agricultural income and if it is sharing the income to the partners, then the partners also are said to earn agricultural income only. The nature of the income will not change when it comes from the partnership firm to the partners. So XYZ is earning agricultural income. When it is given to the partners, then the partner also is said to earn agricultural income and hence the income is still exempt in the hands of partner. So firm also need not pay any tax and the partner also need not pay any tax. But sir, can we use the same concept in case of a company? Let's say XYZ Limited. XYZ Limited is a company, okay, and X, Y and Z are shareholders. And let's say the company does agricultural business and earns 50 lakh rupees. And this 50 lakhs is given as dividend to the 3 shareholders. Now in such case, will this dividend be considered as agricultural income? Yes or no? Answer is no. It will not be considered as agricultural income because in case of a company, the company is a separate body corporate. The company is different and shareholders are different. Both are not one and the same. Hence, when the company is earning agricultural income, income will be exempt in the hands of company, but when it is given to the shareholders, it will not be called agricultural income. It will be called as dividend income, and dividend income is taxable under income from other sources. Okay, so when it comes to partners, partner and firm are one and the same. That is why the nature of the income remains the same and will be exempt in the hands of partner. But in case of company, it will not be so. So hence, even if income was exempt in the hands of the firm, it will still be exempt in the hands of partner. Next, section 1010 BC. Individual or legal heir compensation received from central government, state government or local authority on account of disaster. Okay, Kanna. So if there is any natural disaster like earthquake, fire, flood, tsunami, etc., and if a person or the person's legal heir has received any compensation from central government, state government or local authority, then it will not be taxable, it will be completely exempt. However, the person should not claim such loss as deduction. See, for example, there was a flood. Let's say because of the flood, what has happened is that a person has loss in business. Loss in the business. Because of loss, he has claimed that loss as an expense in the profit and loss account. Let's say it is 1 crore rupees. And because of that, the profit has been reduced and he paid tax on the reduced profit. So now, when the government is giving him any compensation for such loss, then this compensation will be taxable. If you claim the loss as a deduction, then the compensation will be taxable. If you do not claim the loss as a deduction or as a loss, then the compensation will not be taxable. You get my point? Because the government does not want to give the assessee double benefit. If you already claimed the loss as a deduction or if you claimed it as a loss, then you will be reducing your income, and however you will be saving the taxes. Okay, the government does not want to give double benefit by also exempting the tax on the compensation. So you have to make sure that you do not claim such damage as a loss or deduction in your income tax. Next, section 10 clause 11a. Any payment received from Sukanya Samriddhi Yojana is completely exempt. So interest on Sukanya Samriddhi Yojana also exempt. Maturity amount from Sukanya Samriddhi Yojana also exempt. Next, section 10 clause 16. If any person from anyone is receiving an educational scholarship, then it is completely exempt. Here not from government etc. Even if I am giving an educational scholarship to Mr. X, then in the hands of Mr. X it will be completely exempt. Okay. Next, section 10 clause 17. In the hands of MP and MLA. MP and MLA means whom? Member of Parliament and Member of Legislative Assembly. They are getting daily allowance and constituency allowance kanna. So that daily allowance and constituency allowance is exempt under section 10 clause 17. Next, section 10 clause 17a. If anyone has received an award for literary work, scientific work or artwork which is approved by the central government, then such award is completely exempt from tax. So for example, let's say Amitabh Bachchan is receiving the national award for acting in a film. In such case, this national award will be completely exempt from tax. Next, section 10 clause 18. If any person is a gallantry award recipient. Gallantry award means what? Paramveer Chakra, Mahavir Chakra and Veer Chakra. Okay, Paramveer Chakra, Mahavir Chakra and Veer Chakra. You have to remember this. So these three are gallantry awards. If a person has won a gallantry award, then if the person was also a central government or state government employee, if these two conditions are satisfied, then the pension received is completely exempt. Pension is exempt. What are the two conditions? The person should be a gallantry reward recipient. It means what? Paramveer Chakra, Mahavir Chakra or Veer Chakra. And number two, the person should be a central government or state government employee. In such case, the pension received will be exempt. Sometimes what will happen is the person will not be alive. During duty only the person will be no more. In such case, their family will receive family pension. In such case, the family pension is also exempt. So for family pension to be exempt, what is the condition? The recipient should not be alive. The death of the recipient, and here family means spouse, children and parents, brothers, sisters if they are wholly dependent on the assessee. In such case, the family pension also will be completely exempt. Next, section 10 clause 19, family pension. So family pension received by the widow or children or nominated heirs of a member of the armed forces including paramilitary force of the Union, where the death of such member has occurred in the course of operational duty in specified circumstances, would however be exempt under section 10 clause 19. So what is given? If a person was recruited under armed forces or paramilitary forces and on duty, if they lost their life, then if their family will receive the pension, then if their widow or children or nominated heir, if they are receiving the pension, then that is completely exempt under section 10 clause 19. Next, section 10 clause 30. If the assessee is involved in growing or manufacturing tea in India, then if they get a subsidy from tea board, then that is completely exempt. But however, there are conditions. What is the condition? The condition is that the subsidy received from the tea board should be for replantation or replacement of bushes. Tea bushes are there, no? Either they should replant the bushes or they should replace the bushes, or rejuvenation or consolidation of tea cultivation areas. So whatever tea cultivation area is there, that they have to rejuvenate. Rejuvenate means what? Enriching the soil even more so that the produce is even better. That is rejuvenation. And consolidation means what? Consolidation means structurizing the entire tea farm or tea field once again. For example, if there is step farming, maybe the 3 steps can be converted into 2 steps. Such processes are called consolidation. So replantation or replacement of bushes, and rejuvenation and consolidation of tea cultivation areas. If subsidy is received for this purpose, and also if a certificate is received from the tea board, then only such subsidy will be exempt from income tax. Okay, the certificate should be submitted to assessing officer. Similarly, there is also section 10 clause 31. Any subsidy received from rubber board, coffee board or spice board for cardamom or other specified commodities is also exempt from tax under section 10 clause 31. The conditions are also same as we discussed in section 10 clause 30. Okay, so these are only the exemptions which we have not covered in the heads of income and which I am covering right now. Then 14A, I think 14A we have already discussed. 14A disallowance. What is 14A disallowance? Let me just tell you in brief. No deduction shall be allowed against any income that does not form part of total income. It means if you have incurred any expense for earning an income that is exempt, then that expense will not be allowed as deduction. Okay, because the income is exempt, the expense also will not be allowed. Fine. So that is only the concept. I hope you are clear with the exemption chapter. With this, the exemptions are over. If these are not there in your notebook, I would request you to please note these down in your notebook. With this, your entire syllabus will be complete. So see you in the next video, dear. Till then, take care. Bye bye.